So, what are the scenarios for NFP? I think this is the question which interests us most. I have outlined some scenarios of the possible outcome and its impact on the market sentiment about the federal funds rate and the US dollar. Firstly, I'd like to point out that the consensus forecast is about 180,000 of new jobs in America. And this is, of course, less than the previous reading, a very strong reading of July of 255,000 jobs. But it is reasonable because we can hardly expect US economy to produce such big a number as we had in July, 255. This is really, really high, and we can remember that this was a positive surprise for the market. The consensus forecast is much more moderate, and if the reading is in line with consensus forecast, it will keep alive the expectations of the Federal Reserve rate hikes this year. However, we should remember that not only NFP will be released, there will be also data about average hourly earnings and US unemployment rate. So even though NFP may fall under some of these scenarios I have outlined, we will need to add data of average earnings and unemployment rate to make our picture, our scenario more full and for it to be more real and to reflect the real market situation better. Firstly, with NFP, I think that if American non-farm payrolls come below 100,000 mark, then it will be a big disappointment for traders. It will be a kind of repeat of a very weak data which US labor market produced in May. Then there was a big sell-off of American currency on this weak data. And if NFP comes below 100,000, then it will undo all commands of the Federal Reserve members, all the hawkishness about the Fed and the US dollar, and we'll see that traders will price out US rate hike this year, both in September and in December. And in the medium term, I think that will be another push to the upside for the risk assets, for the emerging markets and commodity currencies. So, and certainly a kind of blow to the US dollar, as traders will seek higher yields, higher returns in these higher risk assets. If we have a higher reading of NFP, but below 150,000, then traders will price out rate hike in September, but some expectations that in December the US Central Bank may actually raise interest rate will remain. This will hurt the US dollar, I think, versus all major currencies. Probably it will suffer more versus currencies like the euro and the British pound, because despite of the fact that there are expectations that the central bank will ease monetary policy, they already have done much, and the market may not expect much more from this central bank. I mean, the European Central Bank and the Bank of England. So this scenario just will lead to some decline of the US dollar, not a big sell-off, but still the US dollar will weaken. If non-farm payrolls come in range about the consensus forecast, somewhere between 150,000 and 200,000, then there will be no significant change in how the market is pricing in the US rate hike. We know that there are expectations of more than 30% chance that the US Federal Reserve will increase interest rate in September, and about 60% of the expectations that in December there will be a rate hike. So it will remain like that. The US dollar will have its support, but there won't be any new market moving forces which affect the US dollar and other currencies. So it is a kind of unchanged situation which will keep the uncertainty in place, and taking into account the fact that we won't hear much from the Federal Reserve speakers until the next meeting of the Federal Reserve, which will take place on September 21st, when the market will likely remain kind of sideways, and we won't see big directional moves in any of the currency pairs, I think. Just traders will be watching other US economic releases, but they won't be as important as non-farm payrolls. So as I think that no big moves will happen in this case. And finally, if we have a very strong non-farm payrolls, very strong is, in my opinion, somewhere around 250,000, maybe more. The more, the stronger. Then the traders will expect 2 rate hikes in the United States. They will think that the possibility of the rate hike in September is underpriced in, and it will be a bullish trigger for the US currency against all measures, of course, but here I've pointed out specifically a dollar yen and Australian dollar, US dollar. As for the dollar yen, here the market is really expecting that the Bank of Japan will ease monetary policy in September. Dollar yen, we saw got a rather good support around 100 yen mark. We will speak about it in more detail later. But just in general, we see that US dollar, Japanese yen wants a reason to get higher, maybe to try to change this downtrend, and it needs US data and the Fed's expectations for that. There are expectations from Japanese side, from the Bank of Japan, so together this may produce a bullish reaction in dollar yen. I doubt that it will be a sustainable reaction just on non-farm payrolls, but still for some market sessions we'll probably see a good upside move in case of such data from the United States. And bearish Australian dollar, US dollar, because I think that Australian dollar is overvalued at the current levels, and it is not in line with Australian economic fundamentals, so there is potential for a big move if US data provides a chance for such move. However, as I've mentioned a bit earlier, US non-farm payrolls is not the only release of the US labor market. We'll also get average hourly earnings, and there are reasons to believe that the growth of this indicator has slowed down in August due to some seasonal factors. So pay attention to this fact. This may diminish the positive impact from non-farm payrolls, even if it comes at good levels. And the unemployment rate, of course, is still an important indicator for US labor market as well. In my opinion, the most likely scenario among which I have mentioned is the scenario that NFP will come in line with consensus forecast, and maybe we'll get a bit weaker data for unemployment rate and average earnings. So US dollar won't get a big move from non-farm payrolls report. But all can happen. We know that non-farm payrolls is a very difficult thing to predict because analysts don't have this information that the US Labor Department has, and often even these consensus estimates are not very accurate. Often we see that there is a big divergence between the consensus forecast and what actually comes out as the non-farm payrolls reading. This is why this release is so important. This is why this release causes such volatile reaction of the market. So there can be many different strategies to trade on non-farm payrolls. I expect that we'll see that the market will be sideways ahead of the release, and you know that some traders try to set pending orders in order to catch the big move in the market, regardless of the side which this move will take. I think that maybe the less riskiest strategy will be to wait for the reaction of the market to the non-farm payrolls, and then to build positions for the next trading period. In our case, as we do these webinars once a week, this will be ideas for the next trading week. And as NFP is on Friday, this is actually a bit of rather convenient. In my opinion, we'll have the trading ahead on NFP as the main theme of this week, and then we'll digest the release in our next webinar, which will take place next Monday.